$33.4 billion for AES. Megadeals are up 319% this year. The freeze is officially over.
Hold on. You're looking at the price tag and completely missing the thesis. This isn't some standard infrastructure play.
GIP and EQT teaming up? Huh, come on, that's peak private equity.
It's an AI deal wearing a hard hat. You can't power the next generation of tech without buying up the grid.
Fair enough. Every deal is an AI deal if you squint hard enough.
I don't even need to squint. Just look at what Legrand is buying today. The rundown.
Deals over $100 million are up 224% year over year. The freeze is officially over. We're completely thawed.
I'm looking at the Zurich Insurance deal, and I actually believe you for once. $10.8 billion for Beazley. That's a massive check for a specialty insurer.
It's a classic land grab. Zurich wants that cyber insurance portfolio, and they're willing to pay the premium to get it.
Speaking of premiums, Danone just dropped $1 billion on Huel.
Oh, come on. $1 billion for powdered food?
It's nutritionally complete meal replacement, Nate.
It's protein sludge for tech bros who forget to chew. $1 billion. The bankers on that deal must be laughing all the way to the steakhouse.
The margins on direct-to-consumer powders are actually insane. But if you want real vanity plays, look at the sports gossip. Rip City Rising just grabbed a majority stake in the Portland Trailblazers.
NBA franchise flips are the new billionaire status symbol. Private equity is quietly circling the public markets for take-privates right now, but the real high rollers just want courtside seats they actually own.
Let them have their basketball teams. I'm much more interested in Biogen buying Apellis Pharmaceuticals for $5.6 billion.
Huge pipeline play. Apellis gives them a massive footprint in rare diseases. Smart move by Biogen.
Is it though?
You hate it. I can hear the skepticism.
I don't hate it, but $5.6 billion is a massive risk when you actually read the clinical trial footnotes for their eye treatments. There are some safety flags there that make that valuation look extremely aggressive.
You always find the one red flag in the footnotes.
Someone has to. Unlike the Legrand deals today, that's just clean, smart strategy.
The Datacenter double play. Buying Keydak in China for racks and TES in Europe for power distribution.
Exactly. Everyone is talking about AI software, but Legrand is buying the literal plumbing that keeps the servers from melting.
Well, if you think rack space and power distribution is a smart AI play, wait until we get to our main story.
I'm ready.
Because GIP and EQT just teamed up for a $33.4 billion energy megadeal that makes Legrand look like a rounding error. Let's talk about AES, the big one. $33.4 billion for a power company. I remember when infrastructure was the boring desk at the bank. You wore brown shoes and went home at 6. Now it's the entire casino.
It's not just a power company, Nate. AES is basically the grid. But yes, GIP and EQT teaming up for a $33 billion take private is staggering, even by my standards.
It's the AI premium, period. You can't run the next generation of large language models on good vibes and a few solar panels. You need heavy, massive baseload power.
Okay, hold on. I agree power is the bottleneck for AI, but slapping the AI label on a traditional energy asset just to justify a massive multiple? That feels a little like your old banking pitch decks talking.
Hey, my pitch decks were works of art.
They were works of fiction. Look, the underlying data here is what actually fascinates me. Deals over $1 billion are up 319% year over year. 319.
The M&A freeze is officially thawing.
Thawing? Nate, the ice caps are melting. Deals over $100 million are up 224%. Private equity is officially done sitting on their hands. They are hunting in the public markets again.
Which makes perfect sense. Valuation stabilized, debt is getting slightly easier to model, and if you're EQT or GIP, you look at AES and see a massive cash flow machine. You can optimize it way better when you don't have to deal with the quarterly earnings circus.
I don't disagree on the efficiency play, but let's look at the execution risk. You have two massive infrastructure giants teaming up. Joint bids look great on a press release, But who actually drives the bus when you are restructuring a $33 billion company?
They'll split the board seats and fight about it at the country club. It's a tale as old as time.
I read the footnotes on the financing structure. It is incredibly aggressive. If interest rates don't play nice, that cash flow machine is going to be spending all its energy just servicing the debt.
Sure, but the demand side is locked in. Every tech giant is desperate for power. You own the power, you own the toll booth. It is the ultimate moat.
A highly regulated toll booth. You can't just jack up utility rates because Microsoft needs more servers.
Which is exactly why you want infrastructure guys running it, not tech bros. They know how to talk to regulators. They speak government.
Fair point. That actually is smart. So if AES is the power play for the AI boom, who is building the actual physical toll booths?
Funny you ask. Because while GIP is buying the grid, Legrand is out here quietly buying up the plumbing for the data centers themselves. Voices. So I am reading this note from one of the big banks this morning, and the analyst actually wrote, quote, "The M&A freeze is officially thawing."
I saw that one. They cited deals over 100 million being up 224% year over year.
Exactly. Strategic investments returning, regulatory confidence is back. Nature is healing, Maya.
Nature is playing with heavily skewed baseline data.
Here we go.
I am serious. Up 224% sounds amazing until you remember nobody was buying anything but treasury bills this time last year. You cannot call it a thaw just because the ice age paused for 5 minutes.
Okay, fair, but the second half of their note is what caught my eye. They said heightened competition in AI is acting as a massive catalyst, forcing large caps to aggressively seek scale.
That part I actually buy. The infrastructure demand is totally fear-driven right now.
Which completely explains private equity quietly circling the public markets again. I am hearing so much chatter this week about massive take-private deals getting modeled out. Sponsors are just looking for an excuse to pounce.
I will believe the take-private boom when the debt markets actually price it. Debt is still way too expensive for the classic buyout math to work on a massive scale. Unless we are talking about sports teams, apparently.
Oh man, the Trailblazers.
Right? Rip City Rising suddenly swooping in for a majority stake. I did not have Pacific Northwest NBA drama on my deal sheet today.
It is a wild vanity play, but it shows there is dry powder burning a hole in people's pockets. Sponsors want growth, and apparently, that means you either buy AI capabilities or professional basketball.
The synergy between those two is exactly zero.
Hey, a slam dunk is a slam dunk.
Please never say that again.
Point taken, but if you want to see where the real aggressive scale is happening, just wait until the biotech bankers wake up.
Speaking of waking up, Eli Lilly and Gilead are already setting a floor on healthcare valuations that we need to look at next. Spill the tea.
So Danone drops $1 billion on Huel. $1 billion for tech bro gruel.
You call it gruel, their pitch deck calls it complete nutritional optimization. But seriously, $1 billion for powdered food? The margins must be insane, but I read the footnotes on their customer retention, and it looks incredibly shaky.
It's brilliant. Danone wants that sweet millennial margin. But honestly, consumer deals are just a sideshow right now. The real tea is what private equity is doing in the shadows.
You mean the take-private vultures circling the public markets?
Vultures is harsh. I prefer opportunistic capital allocators.
Spoken like a true recovering banker.
I wear the badge proudly. But look at the data. Deals over 100 million are up 224% year over year. The freeze is over. PE firms are just waiting to pull off massive take-privates for growth and efficiency.
I completely disagree that it's just standard opportunistic buying for efficiency. The AI catalyst is forcing these large cap acquirers to aggressively seek scale. They're terrified of being left behind. They aren't buying for efficiency, they're panic buying capabilities.
Okay, panic buying is a strong phrase, but I'll give you that AI FOMO is real. But if you want to talk about true vanity plays, Rip City Rising just quietly bought a majority stake in the Portland Trailblazers.
Wait, really? The Blazers? I completely missed that. Who even is Rip City Rising? It sounds like an unregulated pre-workout powder.
Close enough. It's a new ownership group, and it's absolutely going to spark a wave of sports franchise flips. The valuations in the NBA right now are getting completely detached from reality.
Well, speaking of valuations completely detached from reality, wait until you see the premium on this $33.4 billion energy megadeal we need to talk about next. Tomorrow's radar at Tomorrow morning, I am refreshing the SEC database at dawn for the MasterCard filings. 1.8 billion for BVNK. The antitrust watchdogs are going to have an absolute field day.
You're way too obsessed with the regulatory angle. The real story tomorrow is healthcare. Gilead dropping $2.2 billion for Uro medicines right after the Eli Lilly move. That's a full-blown biotech arms race.
An arms race built on inflated premiums. You're paying $2.2 billion for a best-case scenario. Show me the clinical data first.
It's a land grab, Maya. Deals over $100 million are up 224% year over year. Strategic buyers are terrified of missing out.
Terrified buyers make terrible deals.
Spoken like a true skeptic. But while you read footnotes, I'm watching Rip City Rising suddenly buying the Trailblazers. NBA valuations are completely detached from reality, and I am entirely here for it.
Of course you are. Former bankers love a good sports vanity project. Read your proxies, everyone. We will catch you next time.